Hello to everyone. Well, welcome to our webinar. I think, Lee, we're letting everyone in. If you can just confirm that we're getting everyone in the room.
Yeah, absolutely. We're up to 17, 18. It's climbing.
Numbers climbing. Excellent. So I hope you can all see the presentation there. And while we just let everyone join in, I thought that I would just welcome the team. So we are going to try something different tonight. And I'm going through a renaissance personally, and I'm trying to do things differently. So I was up till midnight last night and I put together, I don't even remember how many slides, 120 something slideshow. And the team came back to me and said, it's absolute rubbish. We're going to kill them by PowerPoint and we're going to do it differently. So we are going to try a new way of giving an update tonight. So just from our perspective, we wanted to share with you some of the exciting news. We also wanted to share with you some of the lessons that we've experienced through the last couple of months. Obviously, they've been very trying months for anyone that's been in business. And yet there's also a silver lining to a lot of what we've learned. So I think what I'm going to do with regards to our team members is we're going to crack on. But before I do, we've got the majority of our leadership team and board available. So we've got Lyndon Booth, we've got Lee Rush, we've got Aubrey Turner, we've got Ken Williams, and we've got Gavin Rousseau. I'm not going to tell you what they do because I think you probably all know what they do. But welcome to all of you. Thanks so much for you all being online tonight, and equally to our wealth partners, to those of you who've joined us. We really appreciate your time. Transparency and communication is really tough in these days where we're all so busy, and yet it's how do we share the information succinctly so that you know what's happening. So anyway, welcome to the wealth partners and welcome to the team.
Thanks, Scott. Good to be here tonight. Looking forward to having a really interesting and good conversation with the wealth partners. I think we've got some really interesting news, some very exciting reflections on our side that have, I think tonight's going to be an important session for us all. So appreciate it and glad to be here.
Thanks, Lyndon.
Hi, everybody. Welcome. It's great to be online with our wealth partners again. A core part of our business. So we look forward to sharing some exciting updates with you and fielding your questions. So please do either pop them in the chat or the question box, and we'll make sure that we do answer them. But this is going to be different, as Scott said, not only for him, for the whole entire leadership team. So it is exciting. Thank you for joining us.
Thank you, Lee. Aubrey, Ken, Gavin, anything from your side?
Evening all, and welcome. Thank you for joining us. From my side, we're going to try and do the presentation in 20 minutes. We're going to try and do 20 minutes of Q&A. So you're not going to be with us for much more than 14 minutes. So we're going to try and make it quite nice and punchy for you, and I hope that works for you. Be interesting if we can survey that afterwards and you can actually tell us what you think. So look forward to that.
That's good.
I think welcome everyone. Thanks for joining us. From my side, I'm looking forward to, I think, my first wealth partner update where I'm a panelist. So quite exciting. I think it's an exciting time and looking forward to the new presentation process going off well.
Thanks, Aubrey. Gavin.
Yeah, this is the first one I've been to virtually, surprisingly enough. I'm normally in person for these in Cape Town, which is always quite nice. Sharing a relaxing beverage with our wealth partners and really having time to dive into what we're doing and how we're doing it. So it's going to be interesting doing it this way. I'm often make the mistake of talking too much when I should speak a lot less, and I've just done that.
So just on that note, Gavin, you've reminded me something I forgot. Where is everybody? So it'll be interesting to see where people are coming in from. I've got the Q&A and the chat room open. I don't know, Lee, if they've got access to it, but if people could just let us know where they are. And while they're letting us know, I'm going to pivot in to our summary. So what I'm basically going to be running through is 10 major items that the team has come together and decided these are 10 important items that you need to be aware of. So let me talk about the 10 items. I'm not going to go into detail because the team is actually going to be running through it. So the first one is our global authorization, the straight-through payment solution or digital wallets, and our book building infrastructure. And the second one is the meta marketplace. If you never heard of a meta marketplace, don't worry, but where the projects are and the products are being listed and ultimately what we're wanting to list. The platform's facilitation and how we're actually doing it, the B2B direction and the achievement during the Q2 COVID-19, the pivot to high net worths, so the real focus on high net worth individuals and the explanation around that, the B2B high net worth execution, who and how we're going to do it, the benefits for digital marketing, the Q3 and H2, so Q3 and H2 is second half of the year forecasts, the Wealth Migrate Fund, so what we're looking to do, and we've got some exciting ideas with a convertible debt product that we want to talk about, and then the use of the funds, the growth capital for the B2B, and the acquisitive strategy that we're looking to dramatically increase the revenue and ultimately the growth within the company. So what I wanted to do was, I wanted to hand over to Gavin, because we had a wonderful session in March where Ken and myself went around the country. Gavin joined us for some of them. It was right in the heart of when COVID was just coming down. It feels like a lifetime ago, and yet it was only 3.5 months ago. And then we did an online session on the 2nd of April. So there was a huge amount of detail that was here. But what Ken specifically spoke about was that 3 things had fundamentally changed in our business. The first was the global authorization. The second was the launching of the digital wallets, and they actually launched on the 8th of April. And the third was the book building infrastructure. So Gavin, over to you in terms of your thoughts of the impact that that's had.
Yeah, thanks, Scott. So it's interesting, we go back to the last sessions, which we had on 15th, 16th, 17th of March. I remember very clearly because we got sign off from our partner in France, from the French regulator, BNP Paribas, after reviewing our global authorization out of Australia to say that we could launch our wallets. That was on the 16th, the evening, and the message came through as we kicked off the Wealth Partner update that night. I remember making a promise to Scott saying that we'd get it up in 2 weeks. I misjudged that, and instead of the 10 working days, we got it up in 12 working days. So technically a 20% slippage on that particular project. But we got it up, we got it out. And we actually launched 2 days before the 8th because we wanted to have a little bit of extra time to make sure everything was up and running. Now, this has had massive impact for us, especially in terms when it comes to things like paying of dividends, which seems like quite a small thing. Previously, our dividends were costing us in the region of $20 per payment when we're paying it directly into bank accounts. Now they're essentially free, and it's virtually seamless, it's easy, it removes the administrative overhead on our team, it allows us to run smaller and leaner. Also, so far we've paid out 800 dividends. So if you look at that $20 per dividend, it's, in all honesty, that system is now starting to pay for itself, which is absolutely phenomenal. And that's totally removing all the other benefits that it has actually provided for us. It allows people to have everything in a nice centralized place. So when we built this with basic primary capital markets book building infrastructure. I suppose for me, it's second nature because that's my background. So I was introducing a lot of these concepts to guys like Scott and Lyndon. Ken, for him, this was his bread and butter. He understands what a primary issuance raise is. So it wasn't really a big change for him. And we clicked on that quite a lot. So we actually had quite a lot of discussions around it. Now, there are ways to build this that are not scalable, and there's ways to build things that are scalable. I generally almost always fall down on the extreme scalability side rather than the not scalable side. So what we actually did was, I think to a certain degree, unbeknownst to Scott and Ken, we actually came up with a way to launch multiple marketplaces all off of the same infrastructure, but allowing different views of a marketplace. Hence, that's point 2, where Scott starts talking about a meta marketplace, where we created a product, which we, in point 3, we refer to as our platform. This platform allows us to create a marketplace. We then had a look at it and was like, oh, well, we can roll out our marketplace reasonably quickly and simply and easily. That means we can roll out multiple marketplaces quickly, simply, and easily. And that's actually allowed us to open our doors to a few additional opportunities, which we hadn't really delved into in much detail. And that's kind of led us to where we are now. I think I think a few of us call it our Investec moment, which we're probably going to have to get a better name for. But on the morning we were prepping our presentation for Investec to go and pitch to them, and Scott and Ken both looked at me and said, you know what would be really cool? It'd be amazing if we were able to demonstrate our platform to them in Investec brands. I was like, of course we can. We'll have it up and running for them. Took the team 90 minutes worth of branding and 30 minutes worth of effort, and a live platform for Investec, with Investec login, Investec logos, Investec coloring, with a limited version of the platform marketplace up and running. So that really opened everyone's eyes to what the capabilities are of what we have in the back end. It's our plumbing that allows everything else to flow. And that's where the power of that whole system really starts to come in, because the platform isn't just a bunch of code. It's the global authorization. It's the payments that come into it. It's that whole suite all packaged together, which work really, really well. At this point, I'm going to hand the reins back to Scott.
Excellent, Gavin. Thanks very much. And again, the whole idea is we're wanting to keep this short and succinct. And if people want to go into questions, fire the questions through and we'll handle them. Lyndon, I wanted to pivot to you because, Gavin called it the Investec moment. And to be honest, the lights came on for me as well, where my dream, and anyone that's followed, our business for the last 6 years was actually to have multiple marketplaces for different segments. And we just never had the technology to be able to do it. And now, as Gavin said, it's actually a reality. You joked with me about building a Tesla car and how I was worried about what the dashboard was going to look like and what the color of the car was. And you were worried about building the chassis, the wheels, and the driver's engine. We've now got that chassis. Talk to us about a meta marketplace, the products being listed, and why that's so important for our investors.
Yeah, great. Thanks, Scott. Thanks, Gavin. I think fundamentally a meta marketplace, as Gavin said, is a platform that can be used by multiple different people to run their own marketplaces with different asset types. And that's at the heart of it. Cashbox, one of our partners, can use it to get investors into structured notes. Someone who runs a real estate business can use it to get investments into real estate. And someone who runs other asset classes that follow a book build primary raise structure can use our platform and our systems, our wallets, and our global aggregation structure, all for the same purposes, but viewed from their own perspective. So no one actually knows that company X and company Y and company Z are all using the same backend infrastructure. So that's fundamentally what Gavin and his team built. And I think what really was significant for us is we came into this with a very specific perspective as to what marketplace Wealth Migrate was wanting to launch off. And that was very much a retail marketplace for real estate. And I think, we are all in this, both myself as a team member and you as wealth partners, we are all in this because I think we bought into and still buy into the vision that Scott and the early founders had, which was around creating a real estate marketplace that would close the wealth gap, that would make good institutional quality real estate opportunities available to a retail investor. I think we've, as a team, we've done a large amount of strategic thinking and analysis, getting inputs from many of our partners, even from many people on this call. And we've really had a hard look at where are we as a company, where are we strategically in getting towards that dream. And I think there's been three major things that we've realized. Firstly, COVID has impacted, and in two different ways, one very negative and one very interesting. So the first very negative one is that retail investors have completely gone silent. They are those that do still have money are holding on to it. They are not doing investments. So the retail aspect of the Wealth Migrate platform has, over the last 3 months, has completely gone silent. And this is not just something we've experienced, this is across the board. So I think we all know other partners have had to withdraw deals that they weren't able to raise funds on. And we're getting this message consistently from a range of people, not only ourselves. So that was a real lesson for us, is that retail investors in a downturn market, we are going to struggle to get to the numbers we need to become a self-sustaining company. And that was our goal. We wanted to be self-sustaining by the end of the year. That was in the projections we presented in March. And I think we've realized very clearly, given where the market is now, where the world is now, and will likely be for a few more years, the retail option for us is not going to enable us to get to that vision. The second thing we realized is that not only because of COVID, but also because of what COVID has brought about, which is a movement towards digital, that there is a very particular niche of people who are wanting our marketplace. And that group of people is Investec, and I'll use them as an avatar, as an example. Investec, we started conversations with about 4 months ago. What they are incredibly interested in is they run a wealth managed service for their high net worths who have $1 million or more. But their private banking clients, those who have around $300,000 to $1 million, they are unserviced in terms of investment products. And with this movement towards a digital world, they're realizing that if they can capture that market now and offer that market a service, then as that market matures and grows, it will become their next generation of managed clients. But at the moment, that $300,000 to $1 million client is not worth it for them to offer a managed service. So Investec was very much the ones who made us aware of this. And then over the last 3 months, we have had at least 4 or 5 strategic conversations with businesses, family offices, investment houses, who are coming out with the same message. They believe there's going to be strong demand in that bracket between the 300,000 to $1 million investor range in terms of portfolio size, who are wanting a digital advised service, but not a managed service. And our brand at the moment does not talk to that client base. As we've said, Wealth Migrate has been very successful in leading a social movement in a way, a closing the wealth gap, and articulating that very well. But it's not going to, that retail brand is not going to enable us to get financially sound in the next 6 months or year. So, which leads us to the third real learning, is that Wealth Migrate has to pivot. And we need to pivot strongly. We need to pivot with real focus. And this leads us onto the next direction, the next journey. And I think to Scott's point, Wealth Migrate as a brand, being a retail brand, will always have value. It is still the long-term vision. But what we're needing is to have an established high net worth marketplace that makes us sustainable, that gets us to a point where we're making money, we're covering our costs, we're making a profit. Off that base, we can relaunch into the Wealth Migrate retail market and go and get the retail clients that really make this a global scalable activities. So we are really getting to a point now, the focus, clear focus that the leadership team has really got behind and will be driving, is a marketplace that is specifically targeted to the high net worth individual. We are doing this brand, and Scott, I'm probably jumping probably between 3, 4, 5, and 6 all at the same time, but it's great. I'm ticking them off. And so I'm probably about to get to number 6 right now on your list. The high net worth brand we're creating is not going to be based around us, the people you see on the screen. Its whole principle is high net worth investors who can get institutional quality investments vetted and brought to our platform by reputable investment houses or family offices. So the actual piece of who is finding the supply and bringing it to the platform, that will be people like Investec, like a family office who has great connections with a supply chain in real estate or other assets. And they will be, the new brand is a collection, a marketplace of deals provided by different family offices and investment houses into what, when actually, Chad, I see you're on this call, so thank you. It was great to have that chat with you this morning. And you actually kept repeating the phrase, a digital family office. That's really the next generation of the Wealth Migrate platform. Not as Wealth Migrate as it is now, that will stay, that will remain as a retail brand. It's just not going to get a lot of attention and focus from us for the next year, while we really pivot to becoming and providing a service under a new brand. Now, that brand, what we're calling it at the moment is Global Wealth. We are in negotiations for globalwealth.com. Sorry, is it Private Wealth? Privatewealth.com.
Private banking,
And
private service, private wealth.
Correct, and if not, then Private Wealth Global we've already secured, but that's really the feeling of the brand. It's in that private wealth sector where we are going to be targeting. The good news is we've already got two confirmed and maybe another one, family offices who are excited about what this means for them to be part of this. I could go into a lot of details around how we are going to, what is the business offering to the family office that makes him want to be part of this new marketplace. But maybe I'll leave that for the questions if there are any. But that's really the pivot. That's where our team's heading. And I think what we have learned is with the support of Aubrey, who is literally the specialist in performance-based digital marketing, that we can attract the high net worths if once you have brought them there, there's a way to generate trust in the system that we have got online. And that's at the core of the new brand. Scott, I think that's probably more than my time, so I'm going to bounce it back to you and probably Aubrey.
Great. So Aubrey, just before I hand to you, I want to take what Lyndon's just spoken about and just show people visually quickly. So I did bring up 2 slides here. These are not my slides. These are from Offernet, who is Willem van der Post. I am going to give you a link a little bit later, but we've got a webinar with Willem van der Post next Wednesday around, and this is all around AI and digitization, which Aubrey's going to talk to. And, you know, you've seen these graphs from me before around how COVID, yes, it's impacted retail, like Lyndon said, but it's all forced us up this adoption curve. And what we found is that the B2C, business to consumer, might have been tougher, but the B2B actually got easier. The doors we were knocking on that weren't listening to us are now knocking on our doors because they need to go digital. And that was the whole concept of Wealth 5.0 and where we were going with it. And really, where this all came about was in March when we did the roadshow. People started saying to us, well, you've got Cashbox, you've got real estate, you know, why don't you put these different offerings onto the platform? And what I wanted to visually show you was that I was logging in, and you know, when I log into Migrate, you can see all the different real estate assets to be able to invest in. And Denise, I acknowledge your question around the different deals, which we'll talk about in the Q&A. If you log into the alternative investment platform, you can actually see the different types of investments, including the Cashbox deals, which are structured notes, etc. And if I log out of this and I log into the wealth diversification platform, you can now see that we've actually got the ability, and we're really excited with the guys from Cashbox. They've actually got a 9% pound return from Credit Suisse in structured notes. And you can read all about it on the platform. We've also got a convertible debt instrument. We've got a private equity instrument. And over the next couple of weeks, we're going to be bringing in other asset classes because we've been talking a lot about Ray Dalio and diversification. The important part that I wanted to show you is that it's super easy for us to be able to do. And so if I come back to the PowerPoint, you know, really the days of being able to put stuff up, this company that we've got a webinar with coming up, a $13 billion business based out of England, England, America, and Europe. And they've got 1,300 staff. And they are amazed at the capability of what we've built. So many people say, oh, but I can just go and rent the software. This is a lot more than just the software in terms of what we're looking at. And to give you, you know, a little bit of a heads up, we are looking at a distressed medical opportunity that is coming. You know, we're still going through the final due diligence, so let's not get too excited about it until it comes. But again, a $13 billion company, they're looking at a 10% return prior to acquisition. Once they actually acquire the distressed medical assets, they're looking at a 7% plus cash on cash return, and ultimately within a year rolling it up and listing it on the New York Stock Exchange with a 20% discount upon listing. So ultimately providing a whole bunch of advantages, and we will be running a webinar with their CEO in the next couple of weeks. Just in terms of the strategy of what Lyndon spoke about, if you visually want to see it, and Ian Hawthorne put up a note, you know, Ian, for us, Wealth Create was always going to be the $0 to $1,000. Wealth Migrate is the $1,000 to $100,000. And private wealth is what Lyndon was talking about. It's the brand above. It's the private banking. It's the high net worth. It's the 300,000 to the $1 million that Lyndon was speaking about. You've all seen this diagram because, you know, we built this 2 years ago. Lyndon built this, and this is really what the team has built. You've got the platform in the middle. You've got all the different demand partners. You've got the supply partners and the different brands that can come out. Ultimately, what we're doing with the platform, the center, is that we want to say, rather than powered by Wealth Migrate, it's just powered by wealth. And if you think about it, it's a play on words. You know, if you take Investec, which Lyndon spoke of, we can literally create a white label for them, and down the bottom it will be powered by wealth, which makes more sense than powered by Wealth Migrate. It's just powered by wealth in terms of the play on words. And Aubrey, what I'd like to turn to you now is that you and Willem, so we've known Willem since early 2017. He's invested. He's a chartered accountant. He was the youngest partner at Deloitte's, and he actually ran their exponential division. And he's invested in a company that marries together artificial intelligence and digital marketing. And he got hold of me. We've known each other, as I said, for 3 or more years. And he said, listen, I've got something really interesting for you, but I don't want to talk to your marketing department because they won't understand. And I said, don't worry, Aubrey's different. He comes from the performance marketing background. He is digital, and he will understand. And Aubrey and Willem started talking, and they both spoke very highly of each other. And so, Aubrey, if you can talk about these 3 slides that we've got, you know, this digital enterprise, you know, the digital consumer, and what we're doing with OfferNet and the ideas behind it, and also your whole logic around the digital marketing space.
Yeah, perfect. Thanks, Scott. I think just to give everyone a quick understanding, what makes digital marketing so unique and what really makes it scalable is it's so targeted. It's virtually instant. I mean, we can set up a campaign today. It can be live tomorrow morning. It's really adaptable, predictable, and it's super measurable. However, some of the flaws we have in the digital marketing space, it's really labor intensive. You need quite a large team to be launching and marketing campaigns at the scale that we need them to be launched at. And that's sort of where Willem and OfferNet come in. They have an artificial intelligence and machine learning company that really sort of takes that human component out of the situation. So basically what their company does, what the platform does is we'll give them creatives and we'll give them ad copy that we will want targeted to very specific job titles, very specific industries, so high net worth people. Then their system will actually go and make amalgamations of all the different ad copies, all the different positions. It can go down to, you can think of, if it's raining today, you could then automatically show ads for people selling umbrellas. You can go down to so many, there's thousands and thousands of different touch points that this system can really push into and follow people across different mediums, across channels, etc. So it's really just trying to simplify our internal work process, but also really improve what we're putting out into the market to go and actually chase those high net worth investors. So really fantastic model. It's something I've been trying to, you know, it's something in my previous careers we were trying to achieve for a long time, is to really get this sort of artificial intelligence up and running. You know, we can see where changes need to take effect, and then a human has to go make that change. But if we can have those changes taking effect instantaneously on multiple levels, you really just can't match the manpower. I think, overall, Scott, I think that's very broad level on what it is. And if anyone has any questions afterwards, I'm happy to chat some more.
Brilliant. Thanks, Aubrey. And I think my takeaway from what I learned from you specifically, but even with Willem, is that where the world's going, and if you look at this model here where it's got PhD and you know, from MIT and AI and everything else, is 2 things. One is that by getting really focused on a specific niche, you can really target and solve their needs. And the more focused you can get, the more you can bring down the cost and ultimately the return on spend. And the second thing that I learned is that, you know, with performance marketing, you know, marketing in general used to just be spray and pray. And, you know, they used to say 50% of it worked and 50% of it didn't work, but you just didn't know which 50%. What I loved about Aubrey is, even though in the last 6 months he's had quite, you know, more aggressive budgets, he hasn't used those budgets until he's getting the results. So that's what a performance marketer is. They're looking for, if they spend $1, they want to make $4, you know, and really this AI component with OfferNet just takes that to another level and makes it so scalable. So let's look at this meta marketplace and what Lyndon was talking about so you can visually see it. On the top left side, you've got real estate, and our overall meta marketplace is the global wealth group. On the top right side, you've got diversification. On the bottom left, you've got genres, and the bottom right, you've got community. In the center, you've got platform. It's the big blue wheel that everything needs to work off. Then you've got global marketplaces, and finally, you've got local marketplaces. Now, we've got Powered by Wealth sitting right at the center, and we've already got Wealth Migrate with its wallets and its global compliance. It's a global real estate marketplace. Then we've got the Enterprise Property Development Fund, which is a local South African solution running off our platform. There's another one with called Sapin that we're looking to bring live. We're launching the Wealth Diversification. We've got Cashbox live. The brand that Lyndon is talking about is Private Wealth. And it's going to be more than just real estate because it's going to have structured notes. And like you said, it's going to be the products that private bankers and family offices focus on. We're looking to bring on Calio. We're looking to bring on Investec. We can then go to the genres, millennials and wealth, women and wealth, and Sharia compliant. You can literally have a landing page specifically talking their language and then take them to a completely customized solution to be able to invest. And then on the community side, you've got the Wealth University and the Wealth Movement. So that's the overall meta marketplace of the Global Wealth Group. And to your point, Ian Hawthorne, once we're ready and the technology is better, we can get it from down to $1 with the likes of Wealth Create, but it's not going to be the focus for now. We can also do localized solutions. Hilda came up with the idea, Wealth America. We can have Wealth RSA, Wealth Europe, Wealth China, etc. These are the type of look and feel that you can have. And as Gavin said, these can be rolled out in a matter of minutes. Now, I've got some brilliant videos here from the founder of Lemonway. And what we decided tonight, in the essence of brevity, is we're not going to play them, but we are going to share them on the Global Wealth Group. So if you want to watch it, who is Lemonway? How is your money protected? How quickly does the money move? And equally, how he sees our private marketplace. In terms of our focus for the next 100 days, really for us, to keep it simple, it's what you see on the screen now. This is everything that we're focusing on. And the way we break it down is there's really two focuses. One is the platform, where we're looking to make $300,000 in revenue through the platform and get 5 strategic partners on board. And the second is the marketplace with the Wealth Diversification product, where we're looking to bring on $200,000 in revenue, raise a total of $4 million into the product, and have at least $700,000 cash in the bank in terms of that process. So that's the focus in terms of our Q3 results, in terms of where we're going. Just some questions. And Pierre, I saw you brought it up. People always ask, how can they help? Well, the first and most important one is you can invest through the platform. Actually use the platform. Whether you're investing in Orbvest or Infinity or anything, if you invest through the platform, you are adding to your value of your shares. Support lean building trust. There's lots of ideas that we've spoken about in the think tanks. Refer high net worth investors, because that's really the focus, like we said. Become a strategic partner. I know that Ian Hawthorne just yesterday signed up a company with 10,000 investors. Those are exactly the type of people we want to partner with. Help find business teams to take on marketplaces. If you find a group of entrepreneurs that want to run Women and Wealth, with time, those are the people we want to be speaking to. This is probably a different one that we should have a session on around, but if you do have any contacts in the UN, I would like to know. And then get involved in the new launch. And I'm going to talk a little bit about that. Just lastly, before I get to the new launch, just some resources. We've got the data room. So the team charter, I was going to share the team charter tonight, and for brevity, we didn't, but it's all in the data room. And secondly, we've got the webinar with Willem van der Post. Lee, if you wouldn't mind just putting up the link, we've created a lovely landing page as to what you can get out of that webinar. It's 7 things about the present and the future you need to know. And Willem is so eloquent about the future, where COVID has had an impact and where we're going and how we take advantage as investors. And then finally, the last thing that I wanted to talk about, which was really an idea that started way back in March with Ken Williams, the guys at Calio, Brendan Brown, etc., was how do we grow this company significantly? you know, there's a significant opportunity at the moment. And with COVID, it's actually been accelerated with the whole B2B space. And so what we're doing is we're going to do a $5 million raise, $2 million debt product, $3 million equity product. And how we're going to do this is it's going to be a convertible loan, which is going to offer investors between 7 to 10% per annum over 5 years, and then automatic transfer into Wealth Migrate shares, but at a predetermined price today. So it's like buying Google shares now, or agreeing the price for Google shares, but only having to pay for them in 5 years. And through the process, we're going to be rebranding Wealth Migrate Limited, which is the holding company in England, to the Global Wealth Group so that it is part of the ecosystem. The second thing is that if you take the breakdown and why we are doing it, it's for strategic acquisitions and commercial acceleration of the business within an ecosystem. So the team of people you see here are not going to be trying to run all these platforms. It's impossible. You want people in local, you know, in regions or in genres to be running the platform, and we're empowering them. We effectively are creating an incubation hub. And what this will do is dramatically increase our metrics and our revenue on the way to the planned IPO. And what's also the plan with regards to the 5-year loan is that it's secured against our real estate assets. So we've got $4 million of carry on our balance sheet in real estate assets. The loan, the convertible debt, is only $2 million. The reason being, it's a 200% loan to value. So that, you know, even if the carry was to decrease, the capital value is protected. In terms of what's happening and why COVID is providing such an awesome opportunity, we basically are providing the infrastructure to local and global entrepreneurs who specifically want to target their niche markets, everything that Aubrey has spoken about. And this in turn will help us grow the meta marketplace. We're becoming a venture builder where we're going to be onboarding these fintech entrepreneurs to help them build this business within an ecosystem model. Everything that we speak about, community, compliance, technology, operations, digital marketing, they are all requirements in building a marketplace. And ultimately, we're becoming an incubation hub for marketplaces. And why this is important is that one of the things Ken spoke about in March was the importance of strategic acquisitions. We can grow organically, or we can copy what Rockefeller did 120 years ago, and we can use strategic partnerships, strategic acquisitions, and ultimately can dramatically increase the metrics and the revenue and thus the value of the company. So the ultimate aim is to dual list. We've always said between the London and Hong Kong, potentially New York. We've got our metrics in terms of our plan and how we actually want to do it to become a billion-dollar company like we've discussed. The one thing that is really important is that every single one of the acquisition targets will equally benefit. So they will grow their businesses while we're growing the overall global wealth group, which is a win-win situation. How's it going to work with a convertible? Well, we're going to have 3 ticket sizes. We're going to have a silver ticket size, which is a $25,000 debt. It's going to be a 7% interest rate, and it's going to be a $2.20 locked-in share price. The gold is going to be 100,000 minimum. It's going to be an 8% interest rate, and it's going to be $2.10. And the platinum is going to be $250,000. It's going to be minimum. It's going to be a 10% interest rate, $2 a share, or 12.5% discount off the current share price, and it's Class A shares. Just some notes in terms of protection. The first thing is that it's a 5-year term. The second thing is that to protect the income and to make sure the income can be paid, a minimum of 24 months income is going to be kept in a separate bank account to ensure that it can be paid quarterly. And thirdly, the capital is going to be protected against real estate assets. Why are we doing it? $4 million on our balance sheet doesn't help us. Cash in the bank during this exciting time, based on everything the team has explained to you, is the most important thing to grow the value of this business. And therefore, it makes far more sense to provide an attractive solution to investors that equally help us benefit and grow this company. And that's what the global real estate marketplace is all about. Sorry, not the global real estate marketplace, the wealth diversification marketplace, because you can actually go in there now and you can read all about it. It's all, whether it's now property or private equity, it's all available on the platform with all the details. And you can actually go in here, you can read the pitch deck, you can read the investor funding, it's all here. So in conclusion, Amazon did exactly the same thing in 2000. They actually raised $600 million with a convertible note, exactly the same thing. They offered 6.9%, which is where the 7% actually come from, with flexible conversion terms. And that's exactly what we've done. We haven't said it'll be a discount off IPO listing. We're fixing the price today for 5 years' time. The third thing that they did is that they realized that their platform could support other businesses. Like Lyndon has said, Wealth Migrate needed a platform. We built a platform to support Wealth Migrate. But what we've realized is that other businesses need the exact same functionality, like Cashbox, and hundreds of other businesses need the exact same functionality. And finally, there's the ability to be the platform that ultimately supports the meta marketplace, where we become our biggest customer. And we've always had this vision that you're going to have different segments of customers, different niches of customers. You're also going to have localized solutions and global solutions, but they all need to come together on one trusted platform within one trusted meta marketplace. And so that's everything from us. How are we going to use these funds? Well, 48% of it is going to be invested in the tech. We've currently got one agile team. We want to actually have 2 agile teams running in unison. Secondly is the digital products, the branding and the marketing. Hopefully you've seen today that the core infrastructure is there. It's now about branding, it's about strategy, and it's about execution. The meta marketplace rollout, the human capacity and the OpEx. And finally, one that is as important for us is compliance and corporate governance. We want to really look at the best global compliance structure, and we also want to ensure that we have corporate governance, with ideally bringing in ISO, I think it's 9,000 or whatever it is. We've had a quote as to how to do that so that we can continue to build trust. And for me, that's everything. I've got some things to conclude, which I'll say right at the end. But what I wanted to do was, Ken, specifically from your side, is there anything that I've missed out when I was talking about strategic acquisitions, strategic partners, the acquisitory nature of what you were talking about, where when you spoke with the wealth partners back in March, you said, look, we've got a 7 to 8 year plan, but if we were to be more aggressive, we could pull this forward. And funnily, COVID has not hurt us, it's accelerated that.
Yeah, well, I think coming out of this, if people are wondering what we've done during COVID, I think both Gavin and Lyndon have been quite careful with the achievements. Firstly, the platform itself, it's a significant achievement in terms of what Gavin has brought us. And the meta marketplace is vindication of that. So the products that you see listed there are anything from equities, debt, structured notes, and funds. And we've had all of them listed, and more of those will list. So it's a vindication of what the platform can actually do. Lyndon didn't tell you actually that during COVID, and when I got back, he signed up 4 business-to-business relationships in that period of time already. And he's in detailed discussions with 5 further B2B businesses. So you can actually see where this can go. So highly significant. With regard to the acquisitive nature of where we could go with this, remember, we don't need to account from an equity accounting perspective or an associate accounting perspective for the businesses that come through our platform. All we need is the revenue to come through the platform. So if we white labeling for businesses globally and we're receiving the revenue through the platform, well then, that's achieving a huge benefit for us for our valuation. The point to make, however, is that where we have a business that happens to be an education business that has 12,500 clients, they're interested in partnering with us because they're looking for annuity income. What Scott's offering them is a business within a business through our white label. Now, potentially, they could put all of their revenue, change their systems, put all of their revenue through us. They do $3 million a year in revenue. We have raised our last raise, we did it at 10 multiple of our revenue. So, you know, if we're telling you we're going to do 4 million in revenue this year, and they could put 3 million through our platform, you can see that very quickly we can go from 40 million as a valuation to 80 million, to 70 million, I should say. And that might require a cash injection of some sort for them. Now, we could take a 5% stake in them, and it would make no difference to us. We don't actually need to have a 50% stake in them, you know, so we don't need to have a holding stake. But if that gave them the motivation to actually put their revenue through us, it would be a significant benefit for us. And this is exactly what Amazon did. You know, they went to stakeholders first, they asked them for cash, and then they went forward into relationships. So where we have, and you've all seen the valuation forecasts, we can bring those forecasts back by bringing on acquisitive strategic partnerships that actually could contribute to our revenue.
Thanks very much, Ken. I really appreciate it. So what I'd like is there's quite a few questions that are coming up. Lee, I know that you had some polls that we wanted to stick up. Could we run the polls at the same time as we're doing the questions?
Yep, absolutely.
It's the beauty of moving to Zoom is that I'm a little bit like a duck out of water now that we're not on GoToWebinar anymore. So let's just run through the questions here. So Ian, you asked the question about the goal, you know, trying to get to $1 feasible right now. I think hopefully we've answered that. So that's not the focus. And again, to remind everyone, one day, like a wealth create could be 0 to 1,000. Wealth Migrate is going to stay from 1,000 to 100,000, and private wealth is going to be 100,000 and above. That doesn't have to be a one-off investment. You know, if someone invests $10,000 in 10 deals, they're still going to be $100,000 or above. So it's a nuance. I've asked the question recently about having one active offer on the website marketplace, and was told that you are awaiting deals which are relooked at to reflect the new scenario. I would like to suggest that perhaps a notification on the site to inform people of this, so you build some trust and people look out for them and know more about the digital family office idea. I need to know more about the digital family office. Okay, so just on the deal side, I completely agree with you, Denise. And we're actually building out the cards now with the coming soon, etc. So that's exactly it. Now that we're getting more information, we've spent a lot of time internally reviewing, as Lyndon said, what worked and what hasn't worked, and where the best use of resources is for this team. It's a very small team, you know, not just the people you're seeing here. The rest of the team is a very small team, and so we've got to be hyper focused, and it's all about execution. The next thing is, you said, I need to know more about the digital family office idea, global private wealth, as I have a guy in the UK. So perfect. Denise, if you can put him in contact with Lyndon, that would be fantastic in terms of the whole, you know, the private wealth. Pierre said, Scott and Lyndon, we need a doc marketing. So Pierre, we do have the docs in the data room. I'll actually try and get the data room open once Lee stops the poll, and I'll show you where it is in terms of the strategic partnerships, etc. And we'll obviously keep updating them as and when we can, but trying to make it easy for you in terms of the information. So they are in the data room, and I will show you once Lee's finished with the poll. They are worried about what is it going to cost them, or that they will lose their clients. So Pierre, basically in terms of, you know, in terms of partners, again, we can take them through that process in terms of the cost. They don't lose their clients because they own their clients remain their clients. And what we're finding is that we completely agree with what you said up until COVID, and now people are really realizing they've got to go online and get digital quickly. And that's really where the opportunity lies. Lyndon, so yep, so the deck, so you've spoken about that. Okay, so Denise said, can you please show the first slide with the deals points 1 to 3 of the raise? This one, I presume you mean? Or perhaps, so, yep, okay. Okay, Lee, can we stop or if you haven't voted, please, if people could vote on the poll, we'd love to get people's input. Again, it's nothing, what's the word called? It's just an indication for us to understand what people are thinking. There was a question coming through in the Q&A as well, if you wanted to invest directly in shares. So we have actually on the platform, we have put there both offerings. So the share offering, if you want to be a direct shareholder, or the convertible debt. My suggestion is that the share offering, we're actually talking to one institutional partner at the moment. We have got a signed agreement with investors for 3.25 million, plus there's another partner. However, if someone is really interested, and again by invite only, I'd certainly reach out to the team. Jean, if you want to speak to Lee directly, we can possibly look at helping. But as I said, the offering we were talking about tonight was the debt offering. We do have the equity offering there, but at the moment it's by invite only. We're not going to put it up live on the platform. Okay, Lyndon, comment from Manu. The word migrate might no more seat very well with the brand. Yeah, so exactly, Manu, and that's where what's important here is if I jump back, if you look at this here, it's basically right in the center. You've got the powered by wealth, and then it's a play on words. That's why it's the Global Wealth Group, where you've got Wealth Migrate, you've got private wealth, etc.
Maybe I can jump in on that one, because what we didn't speak about a lot is one of the other major strategic learnings we got is that many of the real institutional partners do not want their opportunities listed on a retail platform. So we've had opportunity in the last 2 months for some really quality institutional level deals out of Europe that were brought to us by potential partners, not the sponsor, but by a financial institution. And when that financial institution went back to the sponsor and said, listen, we'd love to work with Wealth Migrate, the sponsor said, sorry, we don't want our deal on a retail platform. Part of our brand is exclusivity and real high net worth value. So we are very clear that the new, and Manu, to your question, Wealth Migrate will be there, but it'll always be a retail brand that is completely ring-fenced and separate from the new brand, and digitally, so that if anyone goes and researches a new brand, there will be no direct link back to Wealth Migrate. And that's important in terms of us being able to attract the kind of institutional quality deals we need from sponsors onto this new platform. Now, some of those deals we will filter down through to Wealth Migrate at the retail brand, but others of them will be different. And that's why the new brand will be called Global, sorry guys, I keep getting mixed, Private Wealth or Private Wealth Global, because we don't want the word migrate in there. We want it to be a high net worth digital family office style brand that does not use the word migrate. So you're 100% correct, and that's direct feedback we're getting from yourself, but also from sponsors and financial institutions, investment houses who are looking to bring deals through our new platform, our new marketplace.
The other thing that's important here is that if you take investing, that's why powered by wealth makes a lot more sense than powered by Wealth Migrate. And equally, if you go back to this slide, sorry, and I go back here. Sorry, I just need to pull this out. If you take the local brands, like even Wealth Migrate China, it doesn't really make sense. In fact, in China, they don't like the word migrate, so they won't let us do it. So, that's where when Hilda said, well, why don't you just call it Wealth America, Wealth Europe, Wealth China? It actually makes a lot more sense. So I can't see the questions, Lee, when can anyone help me with the Q&A? Where have they gone? Oh, there they are. Sorry. Okay, so Andrew's asked, who are the 4 businesses that we've signed up, Lyndon?
Yeah, sure. So the first one is on here. It's Enterprise Development Property Fund. This one's a very interesting opportunity. Once again, I'm probably going to say more than I should in terms of taking up time. EDPF is a South African sponsored project, I guess is the best word, that has significant real estate and government backers in terms of their wanting to develop a Black-owned real estate market and real estate businesses. and they have significant following from some of South Africa's biggest real estate firms who are part of that relationship. So this is the one we've signed. It's actually going to be launched next week. We're preparing a whole range of media and public relations information around this particular deal. It's an interesting deal in that it's RAND-based, so we're not going to be using our US dollar wallet, so we've had to do some changes around that. The second one was USA, which is ex-USA. It's a UK company that has already done 2 completed raises in the last 6 months through our platform, using our platform, but completely for themselves. Alpha Cube is a very interesting business relationship. They are a financial house based out of Cape Town that will enable us to offer any South African deal in rands a legal and financial backend to match our platform, so that we can actually offer, we can go to any of the South African real estate firms now and offer them a digital solution that includes a financial backend that we as Wealth Migrate or the platform company do not need to manage, because that is the bit that is very difficult to scale ourselves. We don't want to run a massive operational team on the back end that's dealing with bank accounts and dividend payments. So we've found a very interesting business relationship there. And they have connections, and we are in conversations with probably 5 additional South African companies through their networking relationship. And then the one that probably was most exciting at the time, but has really been put on hold based on COVID, was Sukna, a Saudi company that really wanted an equivalent of us in Saudi, but COVID hit it and it impacted the financials. So it's really been put on hold for now. And then to the point that Ken made, we are in pretty good conversations with, I would hesitate to say 5 definites, but definitely 3 very hot potential new signings that we're hoping to conclude in the next 3 to 4 weeks. And the kinds of people are, let's talk about it, it's up here. Investec is very interested in having us provide them a investment platform to their private banking clients, completely branded under Investec. They will drive the people. And when we look at the numbers of a relationship like that, it's staggering and could significantly help Wealth Migrate step up to a completely new level.
I think also Andrew asked about who I was talking about in March. So Andrew, it was actually this one down the bottom here, this SVS, which was Sukna. They were going to do Saudi Arabia plus the GCC region. And one of the things we've spoken about is being able to have a Sharia compliant solution. They were blown away by our understanding of not only the tech, but the compliance side. And we actually signed with them in early March. So we signed a complete agreement, and they were due to pay by the end of June. And it would have meant a $400,000 revenue for us upfront, and also a rollout of these local platforms. It was all done and dusted, and we were literally, we made a good strategic decision, which is that they must pay us before we give away our IP. And we didn't do anything until they paid, and we were sort of pushing them because the deadline was the 30th of June. And unfortunately, Ken and the team, we'd all sort of already done our monthly reviews. And on the 30th of June, we got an email saying that they had to go to the investment committee to get the final sign off. And the investment committee said that due to COVID, they didn't have the resources to do it anymore. So as Lyndon said, it's been unfortunately put on hold. However, we learned a hell of a lot. I don't regret it, because it really helped sharpen the saw with regards to everything we're talking about in terms of this rollout. Owen said, what is the estimated capitalization of Wealth Migrate now prior to raising of the 5 million? So I think, Owen, with regards to what you're looking at, is that the share price, we used a number of different valuation methods, which bring it out on or around $2.26 a share. We conservatively, at the moment, people are getting involved for in and around $2 or below that. And so in terms of the overall value within the company, you're looking at in the region of 25 to sort of 30 million. If we can achieve, we've got low road growth targets, and we've got high road growth targets. If we can achieve through these strategic partnerships and everything that Ken and I have spoken about, the high road targets, then that value can go up quite significantly in terms of, closer to probably 35, 40. regarding funding, are you going to structure it in a way your seeders investors can participate? Great question. So one of the things that I think is very important is that for our current investors, so again, remember tonight, this is a shareholder wealth partner update, is that, you know, we want to find ways for people to participate. So to anonymous, if you want to reach out to us, you know, we want to be able to find a way. I think one of the things that Gavin said is that people really should use the platform, get KYC, get your wallets funded, and we might just have some nice surprises for wallet providers, invested wallet fund people. Will you be explaining this now in a webinar, the convertible debt offer? Yep, so Danae's good question. Tonight was just a quick overview for the wealth partners on everything that's happening in the company. We are going to be doing the webinar with Willem next week with regards to the, you know, we're effectively going to be launching it with Willem next Wednesday, where we'll go into more detail. And then the week after that, what Ken and I and Gavin were talking about is actually possibly having an even more focused webinar around the specific details. However, saying that, we have put all the material together. We will have all the landing pages and the documents and the platform and everything ready for the launch next Wednesday. And then, you know, you'll be able to get all the details and we'll be able to help you with it. Okay. The poll by Lee just now, what's the difference when you mention straight funding? Are you buying shares for the value of the total listed? Totals listed. So Denise, I don't fully understand. Lee, you did the same.
Do you want me to give that a crack, Scott?
No. Yes, please. Sorry, Ken, I don't quite understand.
Yeah. So everyone, it's you know, how you should view this is we have a partner that we are very keen to conclude with, who is actually a wealth partner, but they want to put in 3,250,000. We are desperately keen to work with them because we've got such a great interest, and such a great overlap with them. The fact is that the debt product itself is a fantastic opportunity, but it's small. It's 2 million or 5 million, and what it offers is it offers 10% for you in interest for the period, and then it converts automatically into stock. So you're basically buying stock at today's price, but your stock will convert in 5 years' time at this, and obviously the stock price will be where it is in 5 years' time. But you would have had 2 years worth of interest over that period at 10%, depending on the level that you come in at. So it's a fairly straightforward product. And what I'd say is that generally when a business issues convertible debt, the convertible debt yield is small because you're actually getting stock in the business. And Scott said, no, let's be generous, because, you know, people at the moment are looking at up to 10% in yield for a product like this. So he said, at least be generous, but make it a smaller portion of the offering. So that's what we're doing. And then the rest of it is a straight equity purchase. So if you'd prefer just to buy equity now, at A level, you'll get your equity at the stock price. Depending on the level that you come in, we're providing some discounts. And we have the stock available, so it's not like it's dilutive to the current investors. So, you know, while you're sitting there going, gee, I wonder, it's not dilutive, and also understand that no one's taking any money off the table. So it's all going to be used for growth capital or for acquisitive purposes. So it's for the benefit of the, you know, the accretion of growth of the business.
I think there's a good comment made here. The idea behind this is that this is really going to be more of a high net worth focus, and, you know, people like Ken and myself and the wealth consultants are going to be dealing directly with people on a one-to-one basis. So for Denise or anyone else that wants to sit one-to-one and actually go through it and understand it better, and what's the product and what's the risk and what's the protection, we're happy to go through that on a one-to-one basis as well. That's the idea. This is not a $100 product or $1,000 product. The minimum investment, as we said, is $25,000 because it is more of a sophisticated product, and therefore we're going to do it in a one-to-one way. So reach out to us. Let us know if you've got questions. You know, we're happy to help. So Lee, I think I am correct in saying that we have answered all the questions. And if I look at the time, it's 5 minutes past 8, which means I would normally just be getting over my introduction. So
I love your sense of humor, Scott, and how you have embraced this. So thank you very much.
So yeah, to everyone online, I think what I'd do then is let's pivot to the last 2 slides that I had, and I'm not quite sure where my last slide's gone because it seems to keep disappearing. But you know, we spoke in the chairman's letter and at the AGM around trust. You know, obviously at the moment, one of the most important things with anyone when it comes to investment, money, wealth, it's trust. And so we are, you know, through our think tanks and everything we're doing, we're wanting to rebuild trust within the community. We acknowledge that things have happened in the past that disrupted that trust, and we're actively trying to rebuild it. So if anyone's got ideas or how we can do it, and as Dinesh actually sent me a thing this morning, he said, it's not how big your community is, it's how much trust you've got within your community. And I think hopefully tonight the team has shared with you the amazing progress that has been made. Yes, there's been challenges. Yes, we've made mistakes. Yes, COVID has impacted us. But I think that the last 2 or 3 weeks, we've had a very solid review. And hopefully the team has been succinct tonight to give you clear direction on where we're going and what we're going to do to take advantage of the current market. I also remind you why we all became shareholders. You know, we want to make a profit. Our target is to 10x people's investment. We want to be part of a global community where we can learn, grow, and invest with like-minded people. You know, come and learn from Willem. He's an amazing, amazing person. Next Wednesday, I would highly, highly recommend it. And then we want to be purposeful. And, you know, just like Wealth Migrate wants to help the 99% to be able to invest like the top 1%, what Lyndon and the team have come up with is a Trojan horse strategy so that we can help the 1%. And by doing that, we can reverse into helping the 99% in terms of the process. But the vision and the dream hasn't changed. The commercial strategy in the short term has, but with the overall vision and mission remaining the same. And then finally, a story of my brother. My brother is an anaesthetist. He's in the middle of COVID. And at the moment, the medical workers are extremely stressed out. And I saw him do a presentation for his health workers. And he said, really, all that they need to focus on is what they can control and what they're going to focus on next. They can't focus on whether, you know, the world's going to fall apart, and they can't focus on the government and things they can't control. All they can focus on is what they can control and what they're going to do next. And hopefully tonight, we don't know everything. I do not have a crystal ball any better, or the team any better than you. But what we do have is a direction. What we do have is a map. And hopefully, if nothing else tonight, we've shared the map of what we believe we can control and what we're going to focus on. And I leave you with the African proverb. If you want to walk fast, walk alone. Every single one of us on this call could walk alone. All of these leadership team members and board members have the ability to walk alone. But if we want to go far, we've got to walk together. And to finish off what Bill Gates said, sorry, it wasn't Bill Gates, it was Al Gore. He said, if you want to walk far, walk together, but walk fast. And so hopefully tonight, if nothing else, we want to walk together, but let's walk fast so that we can turn the vision into reality and ultimately provide the financial return for you, the global community, and the purposeful impact. Thanks very much, Lee. That is all from me. Hopefully we've shared with the shareholders something to talk about, most importantly, that they can get excited about and that they want to share with others. Have a good evening.
Scott, can I make one final comment before we stop? And I'm so sorry to do it here, but I've been busting to find a place to be able to do this. This by no means that we're not running with the wealth diversification portfolio. And so, you know, there's an excellent product that you should all go and have a look at in the structured note, for example. What it does, though, is we had feedback that perhaps as wealth partners, you wouldn't want Wealth Migrate part of the diversified portfolio. And, you know, perhaps you would want a hospital very specifically, and we got a bunch of feedback. And, you know, as a team, we decided that, you know, what we need to do is we need to actually take a step back and then aggregate the correct products which will be on the platform for you to go and buy. You can buy them individually, but there'll be incentives for you to buy them as a diversified portfolio. So very much we're working with Chad Pope and Andrew Mobsby, for example, to make sure that we get their products away in a diversified portfolio, which we think is a COVID benefit for everybody. But we obviously didn't touch on it here because you know, we limited ourselves to time. So just wanted to mention.
No, Ken, I think very good catch. Thank you very much. And we do have this. The team got it live today, and so it's a product from Cashbox, and the underwriting bank is Credit Suisse, which everyone understands. It's a 9% cash on cash return. When you take the withholding tax into account, it works out at 8.1%. But you can write down that tax, and it's from Credit Suisse, and it's in pounds. So this is exactly what we've been talking about, and really Chad deserves the credit here, because when we spoke about a book building system a year ago and a structured note, I'd never heard of either of them, and yet our team had been building it, and I thought we were purely just being able to build a platform for property or real estate, and yet actually we can put in structured notes, we can put in private equity, we can put in anything that's in the primary markets. And I think that is why we're so excited about this meta marketplace and its partners like Cashbox. I mean, you can literally go on live. The wealth diversification marketplace is literally went live today. We'll be tightening it up over the next day or two and then launching it publicly, where you'll be able to access Chad's products and these high net worth alternative investments. So yeah, very good catch, Ken. Thank you very much. And with time, we will be launching the wealth diversification portfolio, which will be an amalgamation of a number of these products. Lee, that's all from us.
Thank you very much, Scott and the team, for being online. I'm pleased that we got so much engagement to our wealth partners. Thank you very much for joining us tonight. We really do appreciate your time. Please engage with us in the conversation through our various groups. Reach out to us if you have any further questions that we can answer. And we look forward to sharing with you next week during the webinar with Willem on how you can get involved and be part of this exciting future. Thanks very much, everybody. Have a good evening. Take care.
Thank you very much. Cheerio.
Cheers, guys.